Welcome back to Numbers Scream. I'm Tom Ellsworth, the BizDoc, and we got 5 stories with 5 pieces of numerical data for you, the numbers this week. First, crypto runs to gold. Does it? Crypto down, gold up? Is that where the money's running? I'll tell you. The market cools off. That's a headline. Is it really? I'll teach you how to read the numbers underneath and get past headlines and understand what might be happening to your 401k or investment or not happening. Then Elon Musk with a mega merger. He's putting data centers in space. He's got a rocket to do it, and he's got rock. What's he doing? He's putting them all together in space. I'm going to tell you how. And a new guy at the Fed, Kevin Warsh. What's going to happen on his first day? Will the market drop? Will it stay? I'm going to show you the history and what I think is going to happen. And lastly, on decision day, when it's his time to turn the knobs, what will the Fed decision be this week? First up, crypto runs to gold, or does it? We all know that crypto has gone down to 78, 77, 76 is what it was doing today, February 2nd. But also at the same time, look at the run that gold has been on. Does that mean there's a lack of faith in the US dollar? Does that mean that crypto is kind of cooling off and people are running to gold? Does that mean that maybe they're uncertain in the value or what's happening in the stock market and the value of the US dollar? Yes, all of the above is playing into it. It's not a one-to-one relationship, but it's very interesting that as crypto has cooled, there's been a run to gold. I don't think those are necessarily the same investors. I don't think the people that are running to gold are necessarily the absolute crypto hodls. Hold on for dear life. I don't think they're the same people. But what we're seeing with gold and what we're seeing with silver is precious metals running because there's a devaluing of the dollar and there's a little bit of lack of faith in fiat currencies. Well, now you see crypto coming down. Could some of those be over? But what do we know? Gold has never been this precious and silver has never been this precious, which means that the permanence and the rarity of precious metals is running right now, which means there is investor uncertainty in currencies, capital markets, in terms of equity markets, and even crypto. Next up, market cooling off. That's the headline. Is the market cooling off? I'm not so sure. What the headline's saying, what the markets say are sometimes different things. Market goes down 0.5% one day, crashing up 0.5% the next day, soaring. They have to run articles with big words to get people to click and to do things. But let's look at it. Market cooling. So the S&P goes a little below 7,000 after being over 7,000 since really the beginning of the year. And take a look. This is what's going on with market cooling. If you go into the numbers, and this is easy to do, and I encourage you to do it. Advancers, NASDAQ, advancers, far more stocks advancing than declining. 1.45 advancing to decline. NASDAQ, 1.75 advanced decline. New highs above new lows, although in the NASDAQ it was closer together. But you see what this is? What it really means is that when you hear the market is cooling, it's making adjustments to its new high. That's what it appears to be saying. And as right now we've had earnings seasons, it's the first week of February, we had a lot of fourth quarter earnings seasons out there. Now is the time for speculation. Speculation on what? What is happening in the market in terms of the second quarter? What's going to happen in terms of the first quarter? First quarter, we're going to see a lot of results that carry over from holiday spending. What's the reality? We're going to see all that. But right now, you see headlines, market is cooling, but then you look around and guess what? Your 401k, your IRA hasn't really moved much, especially if you're in ETFs, like perhaps you're in an SPY ETF, which is an ETF that follows the S&P 500, but it's a distributed basket of stocks. So when I see market cooling and I see this, I run off and say, really, what's the truth underneath it? And give me 3 days in a row and let me see what's going on. Because what's soaring today is crashing tomorrow. And then you take a look and it really hasn't moved much. That's my thought. Next up, Musk announces a giant merger. Grok and SpaceX. There's been a lot of discussion by Elon Musk that putting data centers in orbit is actually a good way to do it. You get infinite solar and you get cooling because on the other side of the satellite, it could be the temperature of space, which is at times -3 Kelvin, which is an incredibly cold amount. But on this side, you've got no atmosphere protecting you and you have the sun. The heat can be incredible. So a well-made satellite can be self-cooling from one side to the other. That's the technical answer. Well, guess what? Electrical power and cooling is one of the big things a data center needs. If you could get all that gear up there, you would get both. Well, guess what? One of the big 5 AI players is Grok. The space launching enterprise from Elon Musk is SpaceX. You put these together, you have a $1.275 trillion organization, and you have the ability to put it all in space, and that's his plan. Just when you think that he's done everything, he takes it up one level. People on Mars, maybe someday. Data centers, Grok and SpaceX orbiting Earth, maybe tomorrow. Next up, new Fed chair, new reaction. Well, let's take a look. Whenever the Fed has sat down in the chair, the new chairman of the Fed sits there and begins to turn the knobs that affect the economy and interest rates, sending some people screaming, some people cheering. Let's take a look at what the market has reacted. This is the zero line. In theory, you want all the dots to be close to the line because that means that the reaction of the market was more moderate. The more dots you have over here, the more there was a heavy reaction to the Fed chair. So let's go take a look. Jerome Powell, the blue dot is the first year. And then you have the tan dot, which is just the first month. So there's the span. Then there's first 6 and first 3 months. So when they're all together, like the word Janet Yellen, there really wasn't much movement when Janet Yellen sat in the chair. This sweet little old grandma with the gray hair and everything, it didn't appear to be very volatile. Well, guess what? The markets didn't really see that volatile her first years. Neither was Ben Bernanke. And initially, Jerome Powell was right in the same line until there was volatility ending his first year. So as you can see, that was the most recent ones. You go back in time and you can see there's been some volatility, only a few of them, like our recent 2, and you go back to William Martin, which is before I was born, has been part of it. So what we expect Kevin Warsh to be is right about here. However, the volatility could be higher depending on jobless reports and things that are coming in right now, and it could pick up. I'm going to give you a prediction that he's going to look more like Jerome Powell than we want. Initially, I think he'll drop a 1/4 point by June of this year, but then I think there's going to be adjustments to the market. The mainstream media, absolutely against Trump, will be hammering on bad economic stories all the way through the midterms, which I think is going to move markets' perceptions. And so I think we're going to see some shift. So I think Kevin Warsh is going to look more like this. But this is important because he's as important as a member of cabinet to the U.S. economy. Even more important because he controls the interest rates. We'll wait and see, but I think this is what it's going to be. Lastly, what will the Fed decision be in March? Right now, if you take a look at Kalshi, the speculation is that nothing will happen in March, that we are right now up at 89% probability, at least according to people that have wagered over $3 million that they put up for their opinion. You can get yourself a Kalshi account, put a couple dollars up, and put your prediction out there on the line. Right now, 89% say there'll be no change. 9%, almost 10, think there'll be 1/4 point change. And then right here, the white line down here, there are 2 people that actually believe, and they're putting wagers up, that say that the Fed will raise rates 2%, which proves that when the earnings report comes out, I bet Jack Daniels is up. If you like the way we look at the numbers, let us take a look at your numbers. Click the link below to find out what Bet David Consulting can do for you and your business. We are expert operators. The scars on our back match the scars on your back, and we will help you strategize, structure, grow, and find more EBITDA along the way. That's our mission, to work with businesses like yours to take you on your ride to the top. Down below, there's a link. Just click on it and check out the 5x5 model, and then give us a call. If we're Bet David Consulting, we can sit down and talk to you about how we can help you with your business. Until next time, I'm Tom Mills with the BizDoc, and I hope I left you better than I found you.